Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to the week that was. Indian assets continue to recover lost ground, gaining for the third consecutive week amid improving risk sentiment, positive domestic corporate earnings trend, and robust foreign investor inflows. The main draw for the week, of course, was the RBI's August 2022 monetary policy meeting. Though a policy action similar to June was the consensus earlier on, market participants had increasingly priced in a more dovish policy move, more so after the US Fed's dovish policy commentary during the previous week. However, the RBI delivered its third consecutive hike, raising the policy repo rate by 15 basis points to 5.4%. Consequently, the standing deposit facility was adjusted higher to 5.15%, and the marginal standing facility and the bank rate was adjusted to 5.65%. The MPC reiterated its continued focus on withdrawal of accommodation to contain inflation while supporting growth. The MPC decided to retain its FY23 real GDP growth forecast at 7.2% and projected the first quarter FY24 real GDP growth at 6.7%. The RBI retained its inflation projection of 6.7% year-on-year for FY23, with average second quarter inflation at 7.1%, third quarter at 6.4%, and fourth quarter at 5.8%. The RBI acknowledged continued upward inflationary pressures and assumed a normal monsoon and average crude oil price of $105 per barrel in its decision to keep the inflation forecast unchanged. Moving to asset class performances, Indian equities had a positive start but traded sideways during the later part of the week. The Nifty index rose 1.4% in line with most regional peers. With this week's gain, the Nifty index has recovered losses over YTD 2022 and further narrowed the negative gap from its October 2021 peak to 5.8%. Broader markets outperformed Nifty index, with the Nifty mid-cap index up 2.1% and the small-cap index up 1.6% over the week. Among sectors, IT and utilities were the best performing sectors with returns of over 2.6%, while realty was the worst performing sector with a cut of over 2.9% during the week. Indian fixed income market had a volatile week with bond yields falling across the curve at the start of the week. However, bond yields rose sharply after the RBI announced its monetary policy decision on Friday. For the week, the 10-year Indian government bond yield fell 2 basis points to close at 7.3%, while the 3-year Indian government bond yield rose by 3 basis points. The INR also had a very volatile week as rising US bond yields strengthening USD pressurized the INR, while lower crude oil prices and robust foreign investor inflows supported the INR. The INR closed the week at 79.25 per dollar. We also had the India's PMI data released during the week. India's manufacturing PMI rose to 56.4 in July 2022 from a 9-month low of 53.9 last month, as output continued to expand at a faster pace while new export orders moderated. On the price front, output and input cost inflation eased sequentially. Services PMI eased to 55.5 in July 2022 from an 11-year high of 58.9 last month. New business inflows rose at a slower pace as new export orders declined. Overall, composite PMI eased to 56.6 compared to 58.2 last month. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.